To understand passive investing, one must first understand an important investing concept called market beta. Market beta is effectively the performance and risk profile of the overall marketplace. So for instance, market beta for the US equity market is the S&P 500 index. In Canada, market beta would be the return and risk profile of the S&P TSX index today. These allow investors the ability to gain exposure to market beta very simply and inexpensively. Keep in mind that passive or index investors are not trying to beat the market. They are simply seeking to achieve the market rate of return or market beta. And over the past 15 years, this has been a very good thing. Since the financial crisis in 2008, central banks have been pumping cash into the economy and financial markets while lowering interest rates. This is what's called an easy money policy, and it worked to drive up the value of equity markets as a whole. So therefore, driving up the return that market beta was delivering significantly, which of course handsomely rewarded passive or index investors. And because it's been profitable, passive index investing has become ever more popular in more recent years. But will the strategy work over the next several years? Folks, this economy and marketplace is rapidly transforming, as I've discussed in previous videos on this channel. And what worked over the past 15 years likely will not over the next foreseeable number of years. Inflation has taken hold. Government debt levels are now unsustainable for the most part, and the economy is rapidly decelerating. We're in an entirely different economic weather pattern. Already, just since January 1st of this year, 2022, the major market indexes are down 10 to 33% for the year. This has been an absolutely horrible year for passive market beta index investors. More troubling, the necessary and fundamental economic shifts which have caused this poor year will likely endure into the future. In the recent words of Wall Street legend Stanley Druckenmiller, one of the most successful hedge fund managers of all time, who rarely ever gives interviews, he said, "I don't expect that the Dow will be much higher in 10 years than it is right now. Only time will tell if he's right or not. But if Druckenmiller is right, and we are at the end of an era of central banks printing money and pushing it into the economy, then passive index investing will be far less profitable into the future than it has been in the past." To learn how to properly structure your portfolio for the coming economy, please book a meeting with us.